It's good to be back with you. I apologize for being off a video for a while. I have a newborn, so that's obviously well, it takes a lot of time. So I'm excited to be back with you guys and to share some insights on the market. And I bring good tidings, good holiday season tidings. After CPI came in as expected today, it's a lot more likely that a Santa Claus rally will happen. There's a lot of bullish tailwinds behind the market right now, and I believe that this was the last real chance for a negative catalyst to derail a December rally. What would have happened if CPI would have come in hot and the Fed wouldn't have cut is the market would have been disappointed. The odds for a Fed cut were 86% yesterday. As of the new CPI, which came in as expected, they are now 96%. So it's virtually assured that the Fed is going to cut at their December meeting. What is the Santa Claus rally? So firstly, there's a lot of people who don't really understand what the Santa Claus rally is. It's a very specific thing. It's a 7-day period, the last 5 trading days of the year and the first 2 trading days of the year. And as you can see on this graph, it tends to be positive about 80% of the time since 1950. So there's good odds. You can see recently the returns have been more muted. Some of the best returns have occurred in recession years. But we think, given the massive tailwinds in terms of bullish regulatory developments and tax developments, that this could be a Santa Claus year for the books. The reason is because I personally think a lot of the Santa Claus rally has to do with flows and people positioning for 2025. There's a lot that's positive about 2025, and so I think that we could get a lot of positioning during the Santa Claus rally period. Here's the largest Santa Claus rallies, and you can see that these are monster moves for a 7-day period. I mean, the 2008-2009 one was obviously a period of elevated volatility. Even if you leave that one out, the largest Santa Claus rallies are they're pretty breathtaking gains within such a short period of time. So it's a good thing to get exposed to. At Punk Rock Traders, we are not just about buying something and wanting the price to go up. We are about getting exposed to assets when the price is moving the fastest. This is how we get higher gains in shorter periods than the competition. So the Santa Claus rally was a great opportunity for us to provide a trade for you guys. Of course, the trade will only be for our subscribers. One of the things that makes me so confident that we'll have a Santa Claus rally this year is that the bottom-up earnings estimates are incredibly strong at 275. I personally think it's going to be even higher, and we gave a target of 7,500, which is the highest target on the street. And that we gave you some justification, and we did not give a bottom-up price estimate because, you know, I used a different methodology instead. However, I do think 275 could end up being low. This is despite the fact that most of the time the bottom-up earnings estimates are a overestimate. One of the things I think that makes this time different is that COVID really cleared out a lot of the dead wood in America's commercial entities. That's part of the reason why America's stock market is gobbling the world. It's not just because of the safe haven of America's rule of law and our more established and deeper capital markets. It's also because our earnings are simply better than the competition. Our companies are stronger and they're more innovative than European companies, for instance. And that is a large reason why capital keeps flowing to the United States. The economy is also strong. Okay, so you have earnings strong, you have the economy strong, and then you have a bunch of people making the decision at the end of the year of what to do with their capital. These two facts, to me, support the fact, they don't support the fact, they support the assertion that there's going to be a lot of buying in the Santa Claus rally, and it's going to really be one for the record books. I don't know if it will be one of the top 5, but I think we're talking gains of at least 3 to 4% during this year's Santa Claus rally. Of course, barring any unforeseen exogenous risks, right? Russia launches a tactical nuke in Ukraine, then we probably won't have a Santa Claus rally, right? So that's just something to keep in mind. And that's also a black swan event. That's a very low probability uh, outcome. Inflation was not a negative surprise. Okay, so we focus on sort of the hinge points of markets where cause the most price movements. A lot of our trades, for instance, are focused on earnings because that's where most of the kurtosis is. That's where the highest potential for fast price movement is, right? And that's why we do a lot of earnings associated trades. We have two big trades this week who are reporting earnings, and we think those will both end up fortuitously. So we wanted to go over those later in this presentation as well. But what I wanted to just point out is that what the market is saying in response to CPI coming in as expected is basically that the Fed is assured to cut. Now, this means that inflation is still not becoming the primary part of the mandate, and the Fed is still probably a little more focused on the employment side of the mandate, right? And maximizing and keeping the economy at full employment. What this means is that even though Americans are still feeling inflation, even though which is the primary thing keeping inflation elevated, is still higher than we'd all like it to be, what this means is that inflation did not reemerge yet as a major risk point for the market. And that's very positive because inflation is really the bane of most financial assets. Okay, so one of our trade ideas that reports earnings this week is Broadcom. And Broadcom has some exciting things going on. They just announced the AI chip partnership with Apple. They also have a partnership with OpenAI. So even though this seems like a more sleepy and traditional semiconductor name, it's got some really exciting AI undercurrents going on. And we are in an AI-driven bull market right now. I would say that AI is just as significant as the internet. And I would agree with the tech analyst from Wedbush Securities, Dan Ives, that we're early innings of this AI bull market. So Broadcom is a great way to get exposure. And I think that one of the main catalysts that we expect to move the price in our favor is the earnings report tomorrow. So we'll give you an update on what happens, and hopefully it's very good news for our subscribers who bought our Broadcom options. This is Broadcom's performance after earnings over the last 8 quarters. So as you can see, these three up here, if we get a gain like this, our options are going to pay off high into the triple digits. And you can see that there was only 2 instances, well, I guess 3. No, only 2 instances where Broadcom was negative 5 days after earnings in the last 8 quarters. This means that we have very good historical odds for our trade to expire in the money. The other trade we have reporting earnings this week is Adobe. Now, one of our strategies is to get exposure to stocks well before the earnings because of something called the implied volatility flush. And when implied volatility goes up, the price of options go up. So the implied volatility tends to flush going into the earnings event since it's the most volatile event for the stock usually.